Welcome everybody to today's FS Club webinar on open banking. It's going to be led by David Beardmore, the Ecosystem Development Director at the Open Banking Implementation Entity. David will be saying a few words about that before he starts his talk. My name is Robert Pay. I'm an associate of ZN, and it is my pleasure to be able to chair this event today. But I can only do so thanks to the generosity of our many sponsors who allow us to range widely and freely across technology, economics, and finance. My job is essentially to get out of the way as quickly as possible and hand over to David, but first a few housekeeping notes. The slides are actually available already in our download in the chat and on the website, and we'll be holding a 20-minute Q&A session after David's presentation. So please make sure to go to the GoToWebinar chat facility to send your questions in to me. I'll feed those into the conversation later. Over the next 20 minutes, David will unpack for us what open banking is, how it came about, and what's happening both here in the UK, but also point to some of the many other implementations around the world. But before I ask David to present to us, here are a couple of poll questions so that we can gauge the familiarity of you, the audience, with the concept of open banking. So regular FS Club members know that you just go and select one of the following. This first poll is about how much you personally know about open banking. Will help David to orientate his presentation. Okay, so that's, as I might imagine from this audience, pretty high levels of familiarity with the topic, and a sizable minority pretty familiar. And the second poll is about your own organization. So again, I'll give you about 30 seconds to finish that. Yep. Okay, Morgan, I think. So yeah, again, a sizable minority actually involved in this. So David, now we've gauged the audience's familiarity with the concept, over you to enlighten us further.
Great stuff, Robert. Thank you for the introduction, and good morning or good afternoon, depending on where you're listening to this from. Yeah, let's see if we can unpack a little bit more around this. Good to see that there's some familiarity, at least, with this subject of open banking. Just as Robert mentioned in the introduction, I should just explain the very clumsy name of our organization, the Open Banking Implementation Entity. You can tell that it's a government body because no commercial entity would fly with a name like that. So it is exactly as it suggests, as it says on the tin. We are an entity, we are an organization of about 85 people whose job it is to see the implementation through of the regulated part of open banking, so the bit that's been mandated, and I'll explain those mandates in a moment. But we report to the Competition Markets Authority, which is the competition regulator here in the UK. As I say, about 80 odd people, primarily sort of standards, but my team, which is the ecosystem development team, is really the outward facing part, which is why I tend to do sessions like this. And my job is to evangelize around open banking, to see more participants, so more banks and fintechs getting involved with open banking. And my ultimate measure of success is the number of end users in the UK, the number of end consumers and small businesses who are using open banking powered products and services. But before we get into any of this, as soon as you have a label like open banking, it's pretty important, in my opinion, that we understand what it is that we mean by open banking. One of the questions we could have asked is, you know, what do you understand by open banking? And I'm sure there we'd had a much richer set of responses. But here's a definition that I wrote about 2016, 2017, when all this was really kicking off. And it's that top left description. So forget your role in your organization for a minute and just think about yourself as a consumer, you as an individual. For you as the individual, as the consumer, open banking means that you make a choice, and there's the first red underlined bold word, it's about consent. So it's you as a consumer choosing to give access to the data from your current account with whoever you bank, giving access to that data and giving access to another organization that is not your bank. Typically, it's a fintech. So in my case, and I'm quite happy to share my stuff, I bank and have banked for donkey's years with Barclays. So I have a Barclays app on my phone. For me, open banking means me choosing to give access to my Barclays current account data to a fintech who are going to give me back some value, some measure of interest or usefulness in return for access to that data. Now, if you want an industry view, if you want to put your industry hats back on again, the way that we would think about this now is that open banking is about having authorized and approved third parties. So we call them TPPs. Robert will call them fintechs. Fintech, I think, is a rather broader term. So we have authorized and approved third parties, third-party providers, TPPs. They are allowed, providing they're authorized and approved, and I'll talk about that in a second, they can access that consumer data, my Barclays data about my current account, because I've consented to do so, in order to provide back to the consumer products and services that are of value. So that's what it's all about. There are some fundamental words in here. The first one I've already highlighted is choice or consent. This is absolutely under the control and the consent of the individual. If I don't want to share my data, then nobody can get access to it. I remember when open banking launched, and I was the commercial director of the Open Data Institute, and we launched in January 2018. I was on BBC Breakfast News, being interviewed, and straight after that we got a letter where some guy was saying, you know, how dare you take my current account data without my permission? And he completely missed the point. This is all entirely under the consumer's consent and choice. Now, on the right-hand side, I've just listed some principles. I've got them the wrong way around. Consent really should be number one. Consumer consent, absolutely fundamental. But the other thing is, sometimes I'll irritate the techies amongst us by saying this is not about APIs. It's not a tech thing. This is a much broader thing, and we'll talk about some of the implementations around the world. Open banking is really all about consumers recognizing and being given rights of access to data about them, to their data, if you like. So CDR is the consumer data rights legislation in Australia. And I've put that there because I think that to me is so far the best example of writing into national law this principle of giving consumers rights of access over data about them. So the CDR, Consumer Data Right Legislation of Australia, the documentation was written by a great guy called Scott Farrell. Scott's first job was to look at open banking, but no sooner had he published the results of the work into open banking, he was moving on to utility data, and then onto healthcare and onto other sectors. In other words, it wasn't about open banking, it's about giving access to data. A really important principle there. The third bullet on the right is also really important, and I'm going to preempt some of your questions, and I can imagine quite a few of the answers, or the answer to a few of your questions will be this. We have a trust framework. That's what the OBIE, the Open Banking Implementation Entity, one of the things that we have done is built a regulated trust framework to ensure that the data which is sensitive, probably the second most sensitive data after my healthcare data, this sensitive data, that it only flows between parties that are regulated. So to play in open banking, you have to be regulated by the FCA, by the Financial Conduct Authority. There are there are a number of different levels of authorization depending on the role that you play, whether you're sharing data or whether you're involved in open banking payments. We can come to that later if there's time. But the point of the trust framework is that I need to be absolutely certain that if I'm going to grant access to a fintech, now usually, apologies to any fintechs on the line, but often these fintechs have got rather daft names, so plum and apple and banana and yellow goat and odd names like this. They're not names, household names that we're familiar with. I need to be certain that if I'm going to share this sensitive data, that it's with an organization that I can trust. And so our directory is not just a directory like the old telephone directory, a list of names and addresses. There is a technical handshake that says that if I want to allow my Barclays data to be sent to Yellow Goat fintech, then the technical handshake must take place and must connect. So if there's anything in the technical, in the API connectivity, the endpoint to endpoint connectivity, anything in that technical handshake that doesn't marry up, then no data flows. So this trust framework is absolutely essential. And the final part is, if you want to make this work, and this is a lesson from the UK to some other countries, if you want to make it work and work quickly, then some form of regulation is required. In the UK, what we did was we took the PSD2, the Second Payment Service Directive regulations from Europe, wrote those into national law, but added on top of that then open banking legislation. And we added on top of PSD2. So there are differences between the PSD2 implementation in Europe and the PSD2 implementation in the UK, if we're talking around the open banking. So probably the most notable example of the difference between them is that in the UK, within open banking, we mandated a common framework, a common data schema. So that if you're a fintech and wanting to access this customer data and you want to pull date of birth, for example, there is a common standard that says this is how you present a date of birth. Now, in Europe, all the PSD2 regulation says is that you as a bank must give access to any fintech that chooses to, with consent from the consumer, want access to that data. It doesn't say how, it is not prescriptive to say how that data should flow, whereas open banking in the UK does. Morgan, if you'd be so kind as to move on to the next slide. This is just to show a bit more about the regulation. So the CMA is who we answer to, but we're closely tied in with the FCA and with Treasury. And then, as I say, the mandate that the CMA placed on the 9 largest banks, those banks that are listed there, those banks between them at the time covered about 83 or 84% of all current accounts in the UK. Now, the mandate of open banking is for consumers and small businesses, SMEs, up to £6.5 million of turnover, which is why you'll see banks like Danske Bank, who are strong in SME banking, but not necessarily in consumer banking on there. So those are the 9, the nickname the CMA 9, and those are the ones that have no choice but to participate in open banking. Now, as you'll see, if we skip on to another slide, please, Morgan. As you'll see at the top right there, since open banking became law on the beginning of January in 2018, so about 2.5 years ago, we've gone from those 9 banks that were mandated, and if you see at the top right there, 322 authorized. Now, we love acronyms and TLAs, as all of financial services does. So for here, ASPSPs are the providers of data. Banks, read banks there. TPPs, read fintechs. So we have 322 now fully authorized, live in market, participating entities. 91 of those are banks. So remember, we started with 9, but the other, whatever, the 82 others have voluntarily adopted the standard and recognized its value, and are now fully participating in our directory. So 91 banks, 231 SPSPs, but as you'll see partway down the slide there are 781 firms enrolled in the ecosystem. So the rest, whatever 781 minus 322 is, are in our sandbox, and they are developing and testing their apps with the model bank, with the live data, ready to go live. And every week, every month, I sign off the authorization of more banks and more TPPs, so that 322 grows every month. We now, because we have 91 banks, we have something like 98% of all current accounts. So it's highly, highly unlikely that you will choose to share your current account data and it not be possible There's very few obscure providers of data now that are left to roll in. For the techies amongst you, and you want to see a measure of activity, there are about 832 million API calls last month. So an API call there would be me as a consumer choosing to share my Barclays current account data with Yellow Goat FinTech, and they make a call on Barclays Bank to pull that data. That's one API call. Last month there were 840 million of those. And as I mentioned in my introduction, the measure that is most important to me, the one that I'm most interested in, the number of consumers that use that, and currently it's about 3.65 million, and in a couple of months' time we will pass the 4 million mark. So there's a quick sort of snapshot of where we're at. Next slide, please, Morgan. Very quickly, I mentioned that our remit covers consumers and SMEs, so it's important that we have those two audiences in mind. The next slide. What I thought I'd do here is just explain a little bit about how open banking is being used. This is looking at for consumers. So if I, as a consumer, choose to share my current account data with a fintech, why would I choose to do that? What is it that I'm getting back that the banks are not providing for me already? Now, first of all, there's a lesson here for the banks that if they had provided all of these services, it's quite possible that a lot of this wouldn't have happened. But the point is that the CMA found that certainly the big historic retail banks were not competitive enough, weren't providing enough value back to consumers, hence the fintechs stepping up and providing them. The very early days of open banking in 2018, the first apps that we saw were PFM, personal financial management apps. And I've listed a few here, so we're very careful that we don't endorse or support any of these. I'm just saying these are some that are available. Many of these you will know, they're relatively well-known names. So PFM apps is simply me giving access to my current account and the PFM returning to me, usually on an app on my phone, a dashboard that I can access at any time that says, this is how you're spending your money, this is what comes in and how often, and this is what you're spending it on these kind of categories. It might help you in terms of budgeting maybe. And in fact, the one below, the micro savings and investments, some of those PFM apps will help you do that. So what it might do is to say, this is how much you're spending on travel, on entertainment, on food, and it might set some micro savings goals. And it might do things like say, whenever I see a payment that you've made from your account that's less than £5, what we'll do is, with your consent, we'll round it up to £5, and the difference we'll put in a micro savings pot to help you save towards a holiday or your next car or a laptop or whatever it is you might do. And if the spend is between £5 and £20, we might round it up to whatever amount. And so there's those kind of micro savings ones. Now, during COVID, we've seen, not surprisingly, huge amounts of debt and distress, both for consumers and SMEs. And one of the things that open banking enables is a much more speedy and accurate form of debt advice, debt management. And the reason for that is that if you're trying to get some advice and help with that debt, it's very easy to be able to say, look, here's access to my current account. And in a flash, then the organization can see exactly what your income has been or exactly what your outgoing has been. That's very different to sitting with the debt advisor and filling out the standard financial statement that says I spent this amount on food, this amount on travel, arguing about it, perhaps not telling the truth when you say I also spend a little bit at the bookies, but I only spend £5 a month, when actually we know that it's £100 a month, and that could be the source of the debt. So there's a lot, I think, in terms of debt advice, both corporate and for consumers, that's really come good. One of the things that's really come good in the last 6 or 9 months is open banking payments, and so that's that new ways to pay, and folks like Ordo, but also big players like Amex have been very proficient in the use of open banking payments. Open banking payments authorizes the fintech, Ordo or Amex or TrueLayer in this case, to not just to be able to see my account, but to pull funds from my account and transfer them to a trusted beneficiary. And the reason that's really important is that, well, there's a number of reasons. One, the receiver gets the funds quickly, almost immediately. Secondly, and if you ask government, so particularly the HMRC, our tax body that is, you can transfer data with the payment. So things like reference numbers, account numbers, and so on flow within the data packet along with the payment. So that's saving already HMRC and DVLA, various government bodies, huge amounts of money in reconciling incorrect payment references with a payment that's flowed. And there's lots of more things like borrowing. So in the UK, we have an issue where you could be a renter. You could pay your rent accurately, on time, in full, month in, month out for many years, and not have it recognised on your credit file, so that when you do apply for a mortgage at some point, it doesn't recognise that. Open banking can see those payments that have been made on time, in full, the correct amount, and uses that to help you in an affordability season to be able to either apply for future funding or for mortgages. Let's jump on to the next slide, please, Morgan. And this is a parallel slide just looking at SMEs. And I won't go into it in detail. The key thing here is the top left one, cloud accounting. So if you're an SME, so if you're a few £1 million of turnover, up to £6.5 million in the UK, many, I've forgotten what the percentage is, but it is the majority of those businesses. Their accounting platforms are the likes of Xero, QuickBooks, Free Agent, Sage, those kind, and all of those offer open banking connectivity. So in other words, the SME chooses to connect its current account or accounts into Xero, into Sage, into QuickBooks, into it, whatever. And that means then the cloud accounting platform sees what's coming in and sees what's going out. And as a result of that, is able to do many of the other things that are on this page. So cash flow forecasting, it can see, it uses its AI algorithms and says, we predict that on the 26th of this month, you're going to run out of cash because you're going to have to pay your payroll on the 26th, but we know that you don't get paid by your major clients until the 29th. And looking at the state of your account right now, we predict you're going to run out of cash. Yes, you could just go into an overdraft with your existing high street bank, or would you like us to arrange some short-term working capital, a 3 or 4 day loan at a much reduced cost often, and we can set that up for you. And there's lots and lots of those kinds of examples. I was on an SME forum a few weeks ago where one guy, very gracious, and I promise I've never ever heard of this guy, I've never heard of his business, never spoken to him before, openly said that the open banking saved his business during these COVID times. So how's that for a testimony? And open banking payments, new ways to get paid on the right hand side I've mentioned. I'm running out of time, so let's just skip ahead and see what's coming next. If you're interested, on our website, which the web address is there, openbanking.org.uk/app store, or just search on there for the App Store. We have exactly that. We have an App Store. Please don't be fooled that it's not a commercial App Store. There is nothing for sale on there. This is not the Apple App Store. All it is us as the head of the ecosystem pulling together all of the live to market open banking apps and services, broken down, as you can see on there, into consumer facing propositions, business facing propositions, and also technical support propositions. I think there are something like 107, 108 on there the last time I looked a couple of days ago. And on there you can search, if you're interested, all types of products and services for particular markets, for particular features, and so on, and you may well find that useful. So I hope that wasn't a quick prompt from Morgan to wind up, but I think I'm just about on time, 4 seconds to go. So at that point, I'll thank you for your attention, and I'd love to take any easy questions that there are.
Well, thank you very much indeed for that, David. And indeed, there are some questions for you. I'm not sure how easy they are, but let's start with
Robert.
Well, one of the questions I've got here is from Stephen Murgatroyd, and he's interested in the sort of liability model here, such as, who pays if the fintech goes bust, and loses my data?
So there are really good questions, Stephen. What I didn't say at the beginning was that we are 2.5 years into this journey, but the journey isn't finished. And that sounds like a very glib statement, and I promise I don't mean it to be so. What I do mean is that there are some things that are still being worked out. So not everything was prescriptive and set out either in PSD2 or in the UK's open banking regulations. you've picked on a couple there. So the liability model on open banking payments is still being hotly contested. So there's no Section 75 protection, for example, currently within open banking payments. So there are some areas where open banking payments are more appropriate than others. So, for example, right now, if I was booking a taxi, a prepaid taxi, not a sort of London cab, I probably would be quite happy to use open banking payments. I use open banking payments regularly for things like topping up a mobile wallet. I use it. I have a property overseas, and I pay to the Turkish authorities using an open banking foreign exchange app, and I use open banking payments to top that up. What I wouldn't do yet, because the protections are not yet resolved, is I wouldn't buy a plane ticket using an open banking payment app, because as yet that liability model isn't agreed. So I'm sorry that I can't give you the firm answer. The firm answer is that it's still being debated. There are a couple of other areas, just to be completely transparent. If you buy a good or a service in a shop, if I walk into Next and buy a shirt, if the shirt is ripped when I open it and I decide to return it, I'm protected under the Consumer Credit Act in that I can take it back and have a full refund, usually within a time period. If I were to make that same transaction using open banking, at the moment, technically, there is no way, there's no technical mechanism to make a refund on an open banking payment. So open banking payment says to perhaps Next is a bad example, Amazon might be a better example. I could say to Amazon, I trust you and I give you access to my account to pull these funds, but there is no mechanism at the moment. If when I receive that good and I want to return it, as I sometimes do, there's no mechanism at the minute for Amazon to be able to refund that using open banking payment. That we're still working through that. So apologies that I can't give a yes, it's all fixed and here's the answer. It will be fixed, and it is being hotly debated and currently debated. And as and when we develop the solutions and agree those solutions with all of the interested parties, then we will publish those. But I hope that answers your question, Stephen.
Okay, thanks. David, you gave some examples of the growth of open banking payments. I have a question here from Angel Gaviero about what percentage of UK payments are currently done under open banking, and what's your expectation for the next 3 to 5 years?
Yeah, good question, Angel. And I think there are two sets of questions here. Where I thought you were going is a question that often gets asked, which is, open banking's been going for 2.5 years, and you've only got 3.5 million consumers. Is that enough? And then more latterly, your question, which is what percentage of payments are open banking payments? The issue is that you remember I mentioned at the beginning that there are 9 banks that are mandated. The only stats that we get to see, that we're allowed to see, are from those 9 because they're forced. They have no choice. They're mandated to report. But lots of the providers of open banking payment services are outside of the 9. So I mentioned Ordo and Amex, for example. Neither of those are members of the CMA 9. So the answer is we don't know exactly. What we do see is we can see the growth of payments. So at the minute of those API calls, around 10 to 15% are open banking payment API calls. And that has shot up from 1 or 2% maybe 6 months ago. My gut feel is that many of the AIS, so many of the account information sharing apps and services that are going to be launched have been launched. I'm not saying that there'll never be another PFM app or another sort of budgeting kind of personal budgeting kind of app, but I think the majority of those have come now. So the majority of the API calls that are relating to pulling data from my account to tell me back how I've spent my money and help me budget and those kind of things, I think that percentage is pretty much fixed now. The rise in percentage is absolutely, unquestionably, payments. The volume of payments is exceeding our expectations month on month. We forecast every month, and we are revising that forecast upwards every month. What we needed to make open banking payments happen was one of two things. We either needed a major retailer, so you need somebody like Tesco, Sainsbury's, Amazon, somebody like that to take it on board, or you need central government to endorse it and for them to make it happen. The latter has happened first. So HMRC, as I mentioned, now if you are a small business and you go to make a VAT return, if you make a self-assessment return, any PAYE, and you do it online, the first option you'll have, it will say pay by bank transfer. That is open banking payment. So that has resulted literally in the last 2-3 months a spike in the number of open banking payments. We're working with something like 31 other government departments who are now looking to embed open banking payments in there. That will accelerate that. But going back to Stephen's question before yours, Angel, is that what the bit that's not yet sorted is the sort of Section 75 Consumer Protection Act, that kind of the issues around consumer protection. That once those get resolved, then I think we'll start to see more retail applications of it. At the moment, you can pay on things like charity. So if Captain Tom, for example, was the biggest example of making charity payments. I don't know I do know, but I can't say the exact percentage, but it was a substantial amount of the money that was given to Captain Tom was given via open banking payments using Just Giving's website, which was powered by Amex. Right.
So a question slightly adjacent to open banking. I've got a question here from Ania Zalewska. What is your take on open finance as considered by the FCA?
Yeah, fabulous question. Really timely question, Ania, and that is my personal view is, well, you remember I mentioned in the talk that one of the countries that has done this really well is Australia. Australia isn't interested in just doing something narrow in open banking. It's gone for the whole shooting match, but in piecemeal, bit by bit. We decided to make a very rapid but very narrow implementation, just using current accounts. Personally, I can't wait until hopefully the FCA and other government departments like Treasury and BEIS rule that open finance will happen. There is a huge momentum in the UK and around the world as well. This is not just a UK issue. There's a huge momentum around seeing that what we've done in open banking has proved the case. It's proven that we can set a secure trust framework that means that I can be certain that I can safely transfer data from my bank account to a third party, who in some cases who I've never heard of. So we've proven that we can do that. Once we sort out the Section 75 kind of consumer protections, and we can then push ahead on that. But then the argument says, well, if I've set a trust framework that means I can securely trust sensitive data, i.e. my bank account data, surely we've made the case now that if I want to share my gas utility gas data with a third party, that might help me find a better provision of gas services to my house. Surely we've demonstrated that we can do that safely and securely. We've built a dispute mechanism, or a dispute resolution system is built into the framework, so that if there are any disputes, we've got that sort of GDPR compliant means of resolving disputes. We've got the trust framework sorted out. We've got the regulation sorted out. So I'm hoping that the reason you're asking the question is because you're supportive, because we certainly are. We don't want to be a narrow bubble that's just doing open banking. We passionately believe that I, as a consumer, it's very useful on a PFM app that I can see what I'm doing on my current account, but that I actually want to see how am I using all of my financial instruments. So as you can tell, I don't have much hair, and what I do have is a bit grey. I'm getting closer to retirement than many of you perhaps on here. I would like to have an open finance kind of app, so I can view my investments and my pensions and so on, to be able to see how is it looking? How am I looking towards getting towards retirement? Have I got enough, or have I not? Do I need to step up and do whatever in order to get there? That will come with open finance. So I wholeheartedly, I ask, we repeatedly call on the government to make this public and to make to display their hand and say that they want to do this. The problem is in the UK, it's multiple government departments that need to do that. In the UK, apologies to any government departments listening, but we're not typically very good at joined up government on these kind of things. And this touches on a number of different departments. So we desperately hope that they will see the value of it, listen to the vast majority of people who see that it needs to happen. Yes, put the safeguards in place without a doubt. We're not looking for a risky implementation, but we're convinced that we've demonstrated through open banking that the case exists to do this in a trustworthy, safe, secure manner. So yes, we absolutely want it, unequivocally.
Talking of trust, I've got a question here from Hitesh Thakar, and he's talking a little bit, he wants to know a bit about the relationship between PSD2, GDPR, and open banking in terms of actually building that trust framework.
Yeah, Hitesh, good question. I have a longer version of this presentation that I used this morning, and one of the slides talks about the crashing together of exactly those three pieces of legislation. So the UK's open banking implementation of the PSD2 directive from Europe and the GDPR regulations. So all three, well, I mean, open banking in the UK is really a conglomeration of or a conflagration of those two other ones, PSD2 and GDPR. So GDPR is absolutely implicit throughout. So the trust framework is built on the understanding that I need to be safe and secure in sharing data. So GDPR doesn't prevent sharing of data. It just puts one of the things it does is puts a series of protections around there for that individual. And so the trust framework, the open banking directory, builds into that those safeguards in that it uses the biometric login that I use. So I mentioned that I log in with Barclays. If I just want to see my Barclays account, nothing to do with open banking, if I want to just log on and check my balance now, it uses the biometric login of my phone to give me access into my account to be able to see it. That is the same process that we use in open banking. So the security protocols that are used for the consumer to access their account that are GDPR compliant are what is used in open banking. And the same is true at the other end, is that the technical handshakes that I mentioned there that take place are because it is to connect that data to a regulated and authorized and regulated by the FCA entity, to be certain that they are who they say they are and not some scammer pretending to be that fintech that I'm transferring the data to. Open banking in the UK goes further than PSD2. So PSD2 says what the outcome should be, but it doesn't tell you how you should get there. Open banking regs in the UK put some more flesh around that, and we've built then around the customer experience guidelines for providers in open banking into the interpretation of what this should look like. So I mentioned that common schema, and I used the date of birth as an example. PSD2 doesn't have that in, open banking does. So it's quite a long answer, but hopefully that it gives you enough for now.
Okay, I think we've got time for a couple of quick ones here. You mentioned the banks that were mandated at the beginning of the talk. Got a question here from Donald McRae, was how were these banks mandated? I mean, i.e. who chose them?
Oh, who chose it? Oh, yeah. Okay, good question. And often the other question is why those 9? Why not 10? Why not 12? Why not whatever? I wasn't party to that conversation, so the truth is I don't know. What I understand from talking to the head of open banking at the CMA and others is what we needed to do was to get mass adoption with the smallest number of entities written around the table. I don't know if in your corporate life you've done it with me, if you've ever had one of those horrible meetings where there's like 50 people sitting around a conference table and you're trying to decide on something, trying to get agreement. It's nigh on impossible. It's far easier if you've just got 1 or 2. The problem is if you've only got 1 or 2, you don't get the market coverage. So somehow, I'd love to think it's through some scientific modelling. I suspect it probably wasn't, but somebody has totted up and said, okay, well, let's start with the biggest banks in the UK. How many accounts have they got? Okay, that gets us to 70% of the current accounts. Okay, let's add a couple more in. Okay, now we've got to 85%. at that point, if we get 85% of current accounts covered, do we think we've got enough to make this thing fly? And I think that was the process that was used.
I think Donald's question might also be about, was there some sort of instrument that was invoked to do? I mean, were they just tapped on the shoulder politely, or was there an instrument?
It's written into law. It's written into law. So we have in our organisation, which is, as well as having a rather daft name, we also have some odd job titles. So we have our head of, well, he's not even the head of. We have a trustee who is like a sort of chairman of the board, if you like, but he is the trustee of the implementation entity, and his job is to ensure that the regulations that were written into UK law are applied fairly and not indiscriminately by the 9 banks that are mandated by that law. So it's quite an unusual. We're not a regulator, and we're not a regulated body, but we came into existence because of a remedy from the Competition Markets Authority. So we are an unusual instrument. I do apologise.
Okay, we have still have a ton of questions here. Now, what I can tell everybody is that we will send these questions to David, and he will respond to you, is undertaken to respond to you individually. Perhaps just one last quick question, which is about the sort of growth. Question here from Dan Feeney. How will Visa and MasterCard help open banking gain adoption, especially with respect to PISP volumes?
Yeah, well, there's a question. I mean, one of the ways that they are actively involved is by acquiring lots of them. So there's been a lot of M&A activity with both Visa and MasterCard. So there might be some indications there. Well, it depends what view you take. Some will take the view that the credit card rails are threatened by PISP. That's PISP by payment initiation or open banking payments, I beg your pardon. There is some view that they may feel threatened by it, because if I give you that Just Giving example of paying into to the Captain Tom one, they're Just Giving pulled the money directly from my Barclays account. It didn't go via my credit card on file, which results then in turn with the different participants in the credit card rails taking a few basis points on it. So that bit gets taken out. What I hope is that this will be seen as a further evolution of payments. So don't forget, 8-10 years ago, whenever it was, we didn't have contactless. That came in and changed the world. Everybody didn't go bust. The banks didn't go out of business. It meant a change and a shift in payment landscape. And I believe that payment initiation, open banking payments, PISP, whatever we call it, will do the same. And I think that Visa and MasterCard will adapt their propositions to include this. I don't think it means the death of the credit card, but I think it does mean an alternative, another choice for consumers, which is what we're all about. We come from the Competition Authority.
Well, many thanks, David. To conclude, we've got one final poll, which will be a test of how well you've done in this session to some extent. So go ahead, thank you, Morgan, and please give your answers as quickly as you can.
But please don't tell me you're not convinced.
I'm sure that won't be the case. So, well, I think you've done very well there. There's a significant minority of people believe that this is going to be very useful, and combined with those who think it will have an impact but too early to tell, I think it's overwhelmingly you've overwhelmingly won the case for this not being a buzzword.
Good.
So
I'm very pleased with that. Thank you.
So anyway, as we end, I'd very much like to thank firstly the FS Club sponsors, and secondly, I'd like to thank the audience for the attention and actually some really great questions. And I do apologize that we couldn't get through all of them. But as I said, David will deal with those.
Yeah.
Action-packed week next week with no less than 4 webinars coming up, although one of them is actually by invitation only, and not surprisingly, that's the one to do with security and risk. And finally, I'd like to thank David for his excellent and informative talk this morning. I've certainly learned an awful lot. Unfortunately, you can't hear the applause that I'm sure is thundering through many private residences and offices at the moment. But anyway, just to say thank you very much. And in the usual SS Club manner, we're going to finish this rather abruptly with me snapping my fingers and Morgan turning us all off.